Hello friends, a very warm welcome to my channel. In today's video, we're going to talk about a very interesting company called Tejas Networks. So this is kind of a turnaround story of a company which got acquired by the Tata Group, and the fortunes of this company have changed post that. So we'll talk in detail about the business of the company, the outlook, and what should investors do who are invested in this company. Before that, if you're new to the channel, please do subscribe and hit the bell icon. And if you're not a part of our Telegram channel, do join today, because on daily basis we discuss the market analysis on our Telegram channel. So let's begin the analysis of Tejas Networks. This will be a flow of our presentation. We'll discuss in brief the business model of the company. We'll have a look at the chart of the last few years. We'll see the main parameters of the financial performance of the company. We'll discuss why the stock has given such a rally. We'll understand what is the management's business outlook for the next few years. We'll look at the valuations. We'll understand the risks in this business and form a view based on all these things which we have discussed. So Tejas Network is a global company which is R&D driven manufacturing company which is into telecom equipments. So if you look at the focus of this company, it focuses a lot on the research and development. There are times where this company has spent almost 20 to 25% of the revenue in research and development. They have several hundreds of patents in their kitty. So this is the kind of focus on research of this company. So the company develops products right from the design stage, understanding the requirements of the clients. It develops the products, then it manufactures, installs the products, and also does the operations and maintenance post the installation. So it is into high performance optical and data networking products which can be used in several sectors like telecom, internet, defense. Wherever communication is required in such sectors, these products are usable. This is a broad range of the products which the company manufactures. They are into optical, wireless as well as satellite products. In fact, they are into wired and wireline both. So when you look at this, you will understand that the company is into themes such as 5G, which is upcoming and which is going to be a game changer for the communication industry in India. When you look at the split of the revenue, close to about 24% of the revenue is coming from the international segment, which is outside India, and 26% of the revenue is coming from the PSU sector in India, and the rest about 50% comes from the private sector in India. If you look at the chart, the company stock has been falling steadily from about 2018 to 20. In 2020, the stock made a bottom and thereafter it caused a turnaround in the company. And recently the company got acquired by the Tata Group. Post that, it created a lot of more momentum for the stock on the upside. And presently it's trading around almost 850 rupees, and it has given multi-bagger returns for the people or investors who have held this for a long term. If you look at the revenue growth has not been consistent. In FY19, the company did a revenue of about 900 crores and thereafter it fell down to almost 400 crores in FY20, and now in FY23 it is back to the pre-COVID levels. In terms of profitability, the EBITDA has been volatile. There have been many years in which the company has making loss at the EBITDA level. So there is inconsistency in terms of profitability of the company, which again reflects in the margins also, as the margins have been inconsistent. In FY19, they did a 22% EBITDA margin, which went into a loss in FY20, and they did around 10% in FY21. In FY23, in spite of the revenue coming back to the pre-COVID levels of 900 crores, still the EBITDA margin is just 2%. So profitability is where investors should closely focus on, and not just the revenue growth in this company. Now, what led to the sharp jump in the share price from FY20 and FY21? The sectors in which this company works are sunrise sectors, like the company is working in the telecom sector and mainly in the 5G theme. So in 5G, what is going to happen is all the telecom towers are going to be connected, interlinked with optical fiber cables, which bring in huge capex in this industry. And apart from that, there will be several devices which will be installed, which will bring a lot of investment in this sector. And this company is a research driven company which develops such products. So there will be a huge order book of this company now and going forward also. Acquisition of this company by Tata Group also created a lot of trust in the minds of investors, as within the group itself there is huge business which this company can get. In terms of imports, the government is trying to reduce the number of imports, impose a lot of restrictions like anti-dumping duties and several other things which will promote the Indian companies like Tejas Networks, and China Plus One strategy is helping this company increase their exports to other countries like Europe and US. In terms of order book, we will discuss the numbers going forward, that the company has received huge orders from its group company, which is TCS, in the BSNL project. And other than that also, it has an order book close to about 1900 crores. Now, what is the growth outlook of the management going forward? At the end of Q1, which is FY24, they have over 1900 crores worth of order book, which is much higher than the FY23 revenue. And in this quarter, the company has been granted by 50 patents. So this shows the amount of money and efforts the company has been investing in research and development. They have successfully commissioned around 200 sites for BSNL network, which will go on increasing going forward, and the investments in R&D continue. And from their group company, which is TCS, for working on the BSNL project, the company has got an order of about 7,500 crores. Around 40% of this order is expected to be completed this year, says the management in one of the interviews, and the total order will be completed within a timeline of about 2 years, and post that also these sites will be maintained after a gap of 3 years where the warranty or the service period expires. These sites will be maintained by Tejas Networks, and the company will generate separate O&M revenue from the installations on these projects. So this shows that the growth outlook is very strong, and the company has a very strong order book going forward, which can multiply the revenue from the current levels of about 900 crores. In terms of valuations, earlier due to uncertainties and lack of consistent performance, the valuations were very low for this company. It used to trade somewhere around 1 to 2 times the revenue, but due to all these changes which we have discussed, the valuations shot up to almost 20 times the revenue, and now it is trading somewhere around 15 times the revenue, which is slightly on the higher side. But if you ignore the present revenue level and if you discount the future order book which the company has already got, then the valuations will slightly appear to be realistic. What are the risks of investing in this business? There could be regulatory changes which can impact the business of this company. The company is not a monopolistic business. It has competition from companies like Nokia, Huawei, which are multinational companies. It's a working capital intensive business. If you look at the inventory which the company maintains, if you look at the receivable days, they are pretty high and kind of abnormal. So unless the company becomes more efficient in terms of working capital, the cash flows will remain poor and the company will need external funding for its growth. In terms of margins, there is no stability. In the interview also, the management has said that the margins cannot be guided for, and they will see how the projects get executed and how the margins plan out in the future. It is good that the company has got orders presently, but going forward, it could be a lumpy business where in a couple of years there could be good performance and there could be a fall in the performance if the orders are not as good as the previous years. So you have to closely watch in terms of the consistency of the performance of the company. So after understanding the business, the outlook of the management, the risks involved, what is our view on the stock? If you're already holding the stock, as it is a Tata Group company and the order book is very strong, it is advisable that you can continue to hold. And if you are somebody who wants to look at a fresh entry in this stock, then you cannot just jump in at the present level with all your investment. You can buy in a staggered manner on dips and at the same time closely watch the performance and the order book of the company and also the margins of the company closely. If at all these things are deteriorating in the future, then that is a signal for you to exit. Please note that this is not a buy or sell recommendation. This is only a case study which we are discussing for an understanding and educational purposes. So this is about Tejas Networks. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the name of the stock in the comment section. Thank you for watching and have a wonderful day.